everyone, welcome to Voice of Pacific Y. And today we have very special guest, our CEO, Mr. Leon Lay. Please say hello.
Good morning, Minh Châu. Good morning, everybody. This is a good morning from Pacific Y. I am on behalf of Pacific Y. Say hi.
Thank you, Leon. Hello, everyone. Today we would like to bring Leon in the show because we would like him to give us some real estate market. Today, Fed have a meeting and they cut the rate by a quarter. What do you see the market? How does the rate cut affect the market going forward to 2026?
Thank you, Minh Châu. When the Fed decided to cut interest rate yesterday, actually this is a mixed signals. This is the divided decision why we have to have a rate cut to December and not wait until next year. There's going to be people concerned about the rate cut. Some people worry about the economy, inflation is still there. Some people worry about the job market is not really going very well today. And this mainly is other reason as well. However, under pressure by the current administration, the Fed decided to cut rate. And the rate cut yesterday was a quarter rate. It's a 0.25. And a lot of people expecting Fed may not cut the rate a month ago. They didn't expect it. And some people expecting the rate cut of 0.5%, not only just a quarter. But the rate cut is only was a 0.25%. Now, how is it affected into our economy? It depends on where you are. Where you are expecting the rate cut, or you are expecting the rate to stay the same. For the real estate market, everybody wants the rate cut. And a 0.4%, a quarter percent, or 0.25, it's just okay for them to accept it. And I can see the mortgage rate right after rate cut, it jumped. Because of the comment from the Federal Reserve, the chairman said our economy is not so well. So it's good to have a rate cut, but the bad is economy is not so well. That's why the Fed decided to cut interest rate. So what I'm going to see is that the real estate market is not changed much in this December. However, mentality, the real estate markets will get improved, more transaction and more sales start beginning in January.
When you said that, even though there are some concerns regarding to inflation rate and the economy is not that strong, and the rate cuts, and you still see that the market of real estate is still going stronger, coming forward to 2026. What makes you think that?
The bottom line first, confidence. Sentiment, we got a consumer sentiment. People feel more confidence. People see it's the future. Most of people going to buy something, and consume something, spending money because they feel there's a hope. So by many reasons, the monetary policy, the tax policy going better. People hope that will be in 2026. We have a monetary policy, tax policy. It will bring more money into their wallets.
So when people have more money, they are going to be willing to buy more.
Correct.
So that's why you think the real estate market gonna be stronger. And I also know that Fed going to cut rate another time in 2026. When do you think that might happen?
When the Fed decided to cut the rate, like just yesterday, they also indicated there will be another cut. Only one cut into 2026. It will be in January 26.
January or June?
January.
Oh,
however, our current chairman, the Fed chairman, will end up his term in June. So we will have a new chairman coming. And people predict, and the consumer predict, there will be more than one rate cut, not only one. Only one is just coming out from the current chairman.
I see. So from what I heard from Leon, we're gonna have more rate cuts in 2026. This will affect I think when rate cut, it will affect the inflation rate, because normally when the inflation rate and the interest rate normally go together, right? So that will help with the inflation. It's gonna cool down the inflation.
Not really. Actually, the one is kind of is one depend to each others. So the Federal Reserve current policy and their goals is want to control use interest rate, control to manage the inflation. What we have is when our economy have so much inflation, they try to raise interest rate to make people less spending. Because people spending more spending, more inflation. Okay, we consume a lot, and we create inflation. Now, the inflation today is went down from the top, 9%. Going down now is only 3.1 to 3.2% right now. But the Fed is to say, okay, their goal was 2% before they decide cutting rate. But because we cannot wait for too long, the laboring market, the job, the employment is not doing very well. So they decide to cut rate earlier than their goal, the previous goal set. So right now, inflation is about over 3.2, 3.4. Okay. Now, but the Fed says keep cutting. We have to start cutting rates now. Otherwise, it will be too late. People don't have money to spending. The living cost is too high. The expense is too high, because interest rate high creating more high price as well. People have to borrow each other at a higher payment, which means they have to raise price. So that is why we have a 3 rate cut in 2025 already. But the Fed don't want to be aggressively announce that they would cut a rate again. Otherwise, it's to stimulate the spending again. So they say only one more time in January. Okay, that is the reason.
So even though the inflation rate go down to 3.3, 3.4 right now, but I see all the expenses we are expending right now still like the same. For example, just make some example, very simple one. A bowl of pho used to be $12, $13, and now it's $18, $17, and somewhere $20. Even the inflation rate goes down, but that price of a bowl of pho stay the same. So it doesn't help in that term. But I know when the Fed cut the rate, it will help us somewhere else. Can you point it out to see, so that people see, I still have to pay the same amount for my bowl of pho. So then how the rate cut will help the economy? So can you go into that?
In my experience and my understanding, I think the rate cut, it doesn't go straight right away, affect right away your wallet. There's a certain things that affect by the interest rate up and down. For example, the credit card payment. Let's say the people own in the credit card, they have a $20,000 debt in the credit card. The interest rate cut by a quarter percent, which means 0.25, probably save them a couple $100 per month in payment, interest rate varying. And student loan, probably if they have their own student loan, they graduate from school, the federal student loan is going to be reset or changing right away. Every year they change one time. The car payment, if they already have a car payment already established and they have they bought the car a year ago, interest rate cut today doesn't affect it because interest rate set at fixed rate at the time they purchase the automobile, the car. Okay. The only thing is changing is something like credit card. Something is immediate, or the new loan, the new debt. That is why you don't see it's saving a lot of money. But that will be for the longer term. You will see it.
I think I agree with Leon perfectly, and I also see this when the Fed cut rate lower and lower next year, and so the bank, they borrow money from each other at a lower rate. They're gonna lend the consumer who buy home or who want a credit cards to get the lower rate too. So it does affect our living condition, because we're gonna save money here and there, even though we still have to pay for $18 for a bowl of pho, but somewhere else we save money.
Yes,
life gonna be easier for us. And of course, by the way, when rates go down, more people are gonna come into the real estate market industry to buy home. in that case, we're going to have more demand than supplies, and that might create another issue for home buyers.
Right.
What do you think about it?
Yes,
in 2026?
like I say, the mentality is important. Everything is driven by mentality. When people focus on positivity, they will do things one way. They focus on negativity, they will focus on the other way. So interest rate cut is a mentality for now, for the consumer. For the longer term, yes, definitely it will affect their wallet. Some people affect right away. If they do business, they borrow the money from the bank, they will see a cheaper cost paying back. So it's lower payment. When they have a lower payment, they have a more capital. And more capital, they will invest more, and it creates more jobs. So interest rate cut today is that people think in positivity, and then create more opportunity, and then create more business and more employment. But the reason that we talked earlier, that because the Fed actually didn't plan to didn't schedule a rate cut on yesterday, Wednesday. However, because the labor market is softer, it's weaker, so the Fed say, let's cut now. Otherwise, we're losing more jobs and create more hardship for the citizen, U.S. citizen.
So when Fed cut the rate, it's in favor for a better future for the U.S. industry economy, and I also see that we look into the both of price still stay the same, but look back into if you own a home, you look at your home price, it's been corrected the last 2 years, right? The home price being corrected. So home price that you have right now, as from what I'm seeing, starting and entering into 2026, the home price gonna go up. What do you think about this one?
It depends. Actually, it's as of today, or maybe the last 2 years or 1 year, certain areas in the U.S. or state, for example, southern states, the home price have a big correction. For example, in Florida, Texas, Austin, and other states as New Mexico as well. However, in California, also have a different city and counties. In the Bay Area where we are, because the job employment is still strong, and we have about people move in and move out, and we have more high-skilled employee or workers moving in. So the home price here stay pretty much very sustained, or stay and remain about the same, up and down a little bit. It doesn't change much. So predicting to the future home price for this area in the Bay Area for next year in 2026, I predict based on the information I receive, based on the data and the policies heading to, I think the home price in the Bay Area will increase by 3.5 to 4%, and also depend on the home types of home as well. Now, in other states, for example, it's Florida or Texas, it still remains soft. It will be softer until another year, maybe. That time is long. We will update the home price on that area. So it depends. Everything is, I always talking to people. It depends on the one principle, very, very important, and everything will be converted to that principle, which is supply and demand. When we have a more supply, we have a less demand. Definitely, the home price will be the price will be less attractive. And if the demands are higher, supply less, will be higher price. So this applies to the monetary, the interest rate, apply to everything that if you will pay attention to. So if you say, one thing is I want to mention more, even that you didn't ask for example, interest rate cut yesterday, that is not directly affecting the mortgage rate, because the interest rate cut there, like we say, is affecting the savings account, affecting the home, credit card, student loan, orders, the short-term interest rate products. But for the home loans, it's a mortgage, it's a long-term investment. Normally, it's a 10 years benchmark we measure. So it's not affected right now. So everything will affected by the supply demand. We have more money in the market for the investor to lend the money to the homeowners. Then we have a lower interest rate. If we have less money to lend out to the homeowners, then we have a higher interest rate. So that is depend on the monetary policy from the government and also economy grow as well.
I thank you so much, Leon. And like this topic can go on and on. But I think this is enough for today. And if you have any concern or question regarding to your current investment, like your that you want to sell or you want to buy, any of those questions, and you're really concerned about what's coming next in the U.S. economy, you're welcome to call Leon. He's available for you. And his number is 408-646-0893. Leon Lay, phone number 646-0893. Leon not only very professional about and he had all the knowledge about real estate, residential real estate. He also have knowledge about commercial real estate. So if you want to invest into a commercial building, you need a mortgage in commercial building, Leon also available to help you. And if you need a residential mortgage, you can always contact me. And my number 408-393-2068, 408-393-2068. I think it's time to say goodbye.
Thank you so much, MC. Thank you so much for the opportunity for me to opportunity to speak to the people today and to you today. I hope I will return to section anytime soon, anytime this year before the year end. And I hope everybody have a great, beautiful